I feel like anytime you're buying real estate, you're solving somebody's problem.
Yeah, 100%.
You know, and there's tons of different ways you can solve their problem. I had a property not long ago that they were moving from South Carolina to Michigan, needed to move as fast as possible. I said, well, I can close in 7 days. I just need, this and this done on my end to be able to do it. And they're like, done, deal. And we closed in 7, or maybe it extended to 10, but
bingo,
got the deal done. But you're right. You got to find out, hey, what is the reason? Like, what's going on here? How can I fix it? What are your other options? And then just shoot your shot. What's up, guys? Real quick, if you haven't joined my free Facebook group, Residential Real Estate with Jaron Sustar yet, you need to scroll down to the show notes of this episode. Click the link to the Facebook group. It's completely free. Fantastic place to network and collaborate with other residential real estate investors all across the country so that you can continue to grow your real estate portfolio. All right, I'm here with Chris Prefontaine. Chris, what's up, man? Super excited to have you on the show today.
No, I'm psyched to be chatting. Hopefully we can give some nuggets while we do that, right?
Yeah, we were joking. We got an extreme accent from the Northeast mixed with an extreme accent from the Southeast. I think it's going to just make for the most perfect episode of all time.
They got to listen because it's just going to fly by them if not.
Yeah, they'll be able to catch what I'm saying because I talk so slow. We may have to repeat. No, I'm joking, but I'm excited, man. I get to interview a lot of people, and everybody's great. All guests are great. I have noticed, and it's like anything with life, the folks that I get to talk to who've been doing this a long time, I don't want to say they give more value. There is just the potential for them to give more value. And you've been in real estate for, I think, 31 years so far?
Yeah, this September is 32 years. I can't even believe I'm saying that, but yeah.
Wow. So you've seen a lot. You've been through a lot. You've learned more or you've probably forgot more than most of us have ever learned. So, walk us through from the beginning. Why real estate all those years ago, and what's that journey been like for you?
Yeah, so I'll be 10,000 foot view, and if you want to peel it back, just let me know and I'll go back to it. But I started in the early 90s building houses. I wasn't a builder, but I teamed up with one, and we would do spot building. And we would actually, I can't believe I was so naive to ask people to do this. We were doing creative without knowing it. We were tying up the land with owners. We were building the house, and all the subs, the owner, everybody got paid when the house was done and sold and completed, like 90 or 120 days out. But it worked. We built about 100 homes. Did a realty executives franchise, so I kind of wore my broker hat for a while. I had never done that. I sold it to Coldwell Banker in 2000. That was my intent. I never wanted to be in that long term. And then from that point till the crash, I worked on my own investments and coached people throughout the United States and Canada. That was mostly realtors back then, whereas now it's all investor focused. But that led to the crash, right? So the reason I'm here today is we have a family team. My son-in-law, my daughter's back in the mix after having 2 kids. But we buy and sell real estate in the New England area without banks, without pledging credit. And all those lessons were because I got beat up during the crash in 2008. And then we now teach that all across North America, mostly the United States. But we teach the exact same philosophy to students in the field. And when I say teach, we actually do deals with them, Jaron. We literally hold their hand. We're doing calls for them because I think people go to seminars and, or take a course and then they go out in real life and it's just frustrating, So we actually get in the trenches with them.
That's really cool. That is really cool. I think, it's a very complex topic, real estate in general. And there's a lot of information out there, but what I've learned is being able to take that information and apply it is very hard. So to have those people in your corner makes life a lot easier. I know I had somebody in my corner when I first started who guided me along the way. And when you have that, it's almost like that safety net. You can start that journey knowing you don't know all this stuff, but you've got somebody there who's going to be able to help you get it done and then hopefully keep you from doing some dumb stuff. What was it like? You talked about, and I want to talk about the strategy you guys do today, going through 2008, 2009. A lot of people have been through it. A lot of people didn't. I was in college, so I didn't have to bear the nonsense of it. What's that like from a real estate perspective?
Well, it was awful. I can tell you, I remember where I was sitting in February of 2008 when it's like a light switch went off because I had condominium conversions going on at the time that obviously relied on resale of the high numbers, right? The numbers that we were selling them at. I had commercial mixed use. I had a bunch of everything. and I was on every one of them personally. And so, nothing against bankers, right? They got to do their job. When the shit hit the fan, they came looking for the guarantor, and that was me. And so that was a nightmare from February of '08 till February of 12. It took me 4 years. Most of that
Wow.
was me getting out of my own head, right? That I didn't screw it up. That this is a national problem, but I was in my head. So I said, "Jesus, I don't even know if I can go back into real estate." My son got to witness it. Nick is in the business with me now, but he literally was in the office next door, and he got a spoon-fed education on how sucky that is, and don't do that. So by February of 12, I got my head out of the sand and talked to some more mentors, got my mind straight, and got back into what we're doing right now. And it's been 10 years now, 10 plus.
Wow. Yeah, that's it's probably, good experience for your son to be able to sit there and watch that happen. A lot of, especially because he's on your team, right? You said it's a family team.
Yeah, he's super conservative as a result, but he also is very strict with how we accept buyers, how we take on sellers, because he went through it with me, and it's you couldn't have convinced me then that it was good, but now in hindsight, it's exactly why I'm here. I mean, our company hit Inc. 5000 the last 2 years in a row, and I think we'll hit it again this year. But if you told me that then, oh, it'll be great, Chris, in 10 years, I'd say you're nuts.
Wow. Yeah, it's amazing how those things we go through. Obviously they hurt at the time, but somehow, some way, they seem to always bring a light when it's all said and done. They bring a light. That's really cool. So what did that make you guys transition to? So were you guys just buying back in '08 before the crash? Were you buying and holding rental properties? Is that what happened? And then the banks were calling and saying, hey, this one closed, the new one bought it. They're calling your loans. What happened exactly? And then what did it make you transition to when you said, okay, 2012's here, I'm ready to get back in the saddle, let's go?
Yeah, we had a mix. We had the condominium conversions were a hot item then. I had talked to a guy, just a friend, not even a mentor, years ago, and he told me that he did real well with them. So I said, that'd be cool. So we started buying 3, 4, 5, and 6 unit buildings, always within that range, and we were converting them to condominiums. They were going like hotcakes. But like when the market crashed, I'll give you one example. We were in Providence, Rhode Island on one project. We were selling them for 172, a 6 unit building, 2 of them, boom, boom. When that hit, like I told you, like a light switch, I couldn't give them away for 55 grand. So obviously the construction numbers don't work. So that was one projects like that we had going, a couple threes that we hadn't spun out of yet, unfortunately. So some we kept, rented them out, short sale, like we had to work out each one. Other projects we had like a mixed use commercial building. It was pretty cool, but we gather investor money to do that. So I just don't go to banks and go to investors now or sign personally on anything. And except for when people call me and say, what do you think if I have a personal residence I need to do and I need this neighborhood? Okay, that's fine. Just keep your loan to value stupid low. But other than that, I do not use banks. That was a nightmare.
Yeah, that's an interesting take. I obviously use banks, and I haven't been through '08, but I've talked to a number of guys who did, and it seems as though the folks, I'm talking from a rental perspective, because I focus a lot on buy and hold rental properties. We'll fix and flip if you need to make a buck or two, but my bread and butter is buy these properties and hold. And a lot of times, the bank's holding 80%, 75%.
Yeah.
And when I talk to some of these folks who've been through the chaos, the ones who had good equity in cash flowing rental properties, they're still alive. They didn't have any issue.
Agreed.
But it was when I've talked to the guys who had a lot of projects going with flips, they had a lot of short loans out. We're talking 30, 60, 90-day loans out. Yeah. They ended up getting hammered. And there were some guys even who had rental properties where a bank went under and got bought by another bank, and that other bank was saying, hey, we want to call this loan. Now, I think that's why it's important, if you're going to use banks, you need to have a couple of them. But anyways, it's interesting to see, what people were doing through that '08 time to say, okay, this put me in some trouble. Or some of them are like, all right, we made it through. We had enough cash flow. Renters still needed a place to live. We may have to help them a couple months. But it was interesting. I look back and I'm like, you know what? I'm pretty glad that I didn't have to go through that. And I talked to some of my family members who are older, in their 70s, going on 80, and they said, there may have been a time in our life to where it was that bad, but that's probably the worst hit we've ever seen on real estate in their lifetime, which is crazy that a lot of us lived through it. There's
still people with their head in the sand from that. I mean that in the nicest, caring way. I mean, I have people come up. I have this one gentleman that has come to the last 3 live events. Post-COVID, we've had 2. and said to me, yeah, '08, my wife, I just can't even imagine still being stuck and like move on. Right. So if you're listening and you're in that, it's time to move on. And there's some great opportunity here, obviously, in the next several years.
Well, I appreciate you diving in on that. People have a lot of questions about it. I think when people hear real estate, they immediately go back to that time still today, even us who didn't live through it from a financial perspective. And so I appreciate you talking about somebody who said, hey, I was in the trenches doing it. And here I am still buying real estate. So that's cool. So how did you transition? What does your guys' strategy look like now?
We only buy to accomplish what we just talked about. We only buy owner financing, and I'll niche that down in a second. Subject to existing financing. So if you're brand new out there listening, it's just I buy the house and the loan stays in the seller's name. They're the guarantor, not me. And then the third is we buy lease purchase. Only place we can't do that is Texas because you can't be in the middle of a sandwich lease. Everywhere else you can. The owner financing I love, so I'll niche that one down. We focus primarily, Jaron, on free and clear properties for owner financing. So like this building I'm standing in is my building. I bought it in November of 18. I bought it from an owner that had no mortgage, free and clear. He literally put a sign out on a busy road here, and he had realtors coming saying, I got offers. He didn't want it for trust, estate planning, and for tax reasons. He wanted owner financing. So that's what we gave him. But the reason I say free and clear is we do principal only payments most of the time, like 98% of our deals. If I structure an owner financing deal with a seller, they're getting principal payments monthly. That is a major play against any recession hedge or anything else you got going on out there because you're hammering principal every single month. Those are sweet. Those are very lucrative. And I'm not
saying you just give them more.
What was that?
More than what they're wanting. You get terms to be able to do that. You're giving them more than what they want to be able to pay down on principal.
Sometimes, good question. We'll either give them lists like this property was on the market at that time for $550 in 18. It's worth more than double that now, and I gave him his $550. He was getting lowball offers. A, he didn't want lowball. B, he didn't want cash. He just didn't want it. So but I don't mind doing this. Here's sort of a formula. If a house, I tell all my students this, if you want to add 3 to 6 months even worth of monthly payments on top of the price, who cares? As long as you got at least 4 or 5 year terms. In this market, I prefer 5 to 10, but at least 4 or 5. And then I'll give you a metric. It's pretty cool. So, and again, it's not like we do 10 of these a month, right? You got to find these, but there's lists to find them. If you have a house, I'll give you 3 or 4 metrics, and you buy it for, say, I'm going to use round numbers, $200,000 or higher, and you structure monthly principal payments with the owner of $1,000 a month or higher, and you get at least 4 year terms, you have a 6-figure deal all 3 paydays the way we do it. 6 figures every time. So can you go out and find, I don't know, 3, 4, 5 of those next year? Sure. Yeah, I mean, those are sweet deals.
I love that. I love it. Yeah. Now you said, 4 to 5 year terms. Break that down. I believe you're talking about a balloon payment, correct?
Yeah.
So how will you try to structure, your payment schedule versus what you're doing with your terms?
Yep. So let me give you an example. It's always good to give real examples. So we bought an oceanfront because everybody thinks you got to do this on low end. We bought an oceanfront home. Cape Cod is a resort area not far from me, an hour. This woman who's selling it, the punchline is she was a realtor. She couldn't sell it. And the reason is she had circumstances that conventional market wouldn't, take care of, i.e. her mother was in there and sick and they wanted some more time there, all these little things. So we structured a 4-year term with her by giving her $945,000 home, almost $1 million, gave her $2,500 a month principal only. And at the end of 4 years, the balloon was due. Now we ended up extending that a year or two and made the deal even better, but that's how we structured it originally. So then how do we exit? We always exit. I'm going to say for this chat, because you can go advanced, but for this chat, we always exit with rent to own. So someone's coming in to the table with a down payment. They're a true buyer. They just need time. Post-COVID, this is great because there's a lot of entrepreneurs with money that left corporate and they're starting their business and they need 2 years of seasoning with the bank. So they come in with a down payment, payday 1. In that case, we're paying her $2,500 a month. That buyer is paying us $3,800 a month. That's payday 2 every month. And then payday 3 is great because it's all of that principal reduction you got all those years, 4 years, $30,000 a year. And then, of course, any markup you do in the house. And that's how you get these free and clear deals so lucrative, by just doing that kind of an exit. I will mention this, Jaron, because I know you know enough people that talk about rent to own. Rent to own, when done right, we cash out somewhere between, let me go the other way. We default, our buyers default somewhere between 2 and 7%. In a given year, it can hit as high as 10, but it's never gone more than that. It's usually 2 to 5. And that's because my son, Nick, handles the buyers. We are super strict. They got to truly be a buyer. This is not throw someone in the house and then do it again, like a lot of people educate you to do. It's awful. That's morally and ethically awful. So
Yeah.
that just a caveat there with how we exit.
Yeah, that's really, and you obviously try to time it up to where they're buying before that balloon's done.
Ahead of time. I like a year buffer to that point. Yeah, really good point, because life happens and credit didn't get fixed in time or whatever, or divorce. And we need that extra year in case they do default. COVID, we only had 2 out of like 60 something. It's not bad, but we had time to sell them conventionally.
And it seems like a lot of times, and this is not a blanket statement because it dependent upon sellers. But if you have, because I've done some seller financing deals, if you have a seller financing deal and you're honest with the seller and they got brains and they're not just trying to be a jerk, I've had good success with them working with me. If we need to extend the terms out 6 months or extend it out a year. Now, I don't want to tell anybody listening to this to bank on that because that could get you in trouble. But that's all my own personal experience.
I think
they're
you're spot
usually
on.
pretty good to work with.
Yeah, no, I think you're spot on. I love the way you said it, because I'll say to a seller, they'll say, well, excuse me, what if the market crashes? I don't know. I'm conservative, so I'm trying to give you a long enough date. But if we have a national crisis, I'm going to come back and talk to you. Like, stuff happens. It's real estate. We had a guy, hope this never happens to anyone, but we had a guy that went in one of our homes. We decided to take a home right before COVID and rent it out. We do that on occasion, keep it, and then later on do the rent out. So it's a beautiful house on 15 acres, $500,000 home. Guy went in there, and my realtor screwed up, took a false Social Security number. The guy is fraud. Got in there, paid 1 month, and then sat in that house for about a year, and it was almost 2 years with COVID.
Oh.
Now, I tell you that to say I called Bob, the guy who had the note, and twice we extended it, because I said to him, this is important for the listener to know, our contracts are set up like this. I said to him, Bob, you don't want the house back, do you? This guy's in there. He's squatting. He said, gosh, no. I said, okay, I need an extension, because that's your alternative. Take the house back. That's important to know. Now, if you had that with bank financing, for the listener to know what's going to happen, you don't have that option. They're going to foreclose on you if you stop paying them, right? Or need an extension or whatever. You're going to try to change it. So very important. Our agreements are very custom to creative financing.
It's no secret that if you're going to be successful in real estate investing, you have to be able to fund your deals. Whether you're doing the Burr method or whether you're fixing and flipping properties for a profit, you got to be able to get to the closing table with money, and you got to have money to rehab the property. And so I personally use Backflip Capital when I need money to get to the closing table and to rehab my properties. I'm in the middle of a flip right now, and I partner with Backflip. It has been the smoothest process of all time. I literally went on their app, applied for the loan. You get pre-approved in less than 48 hours. You can lock in funding in just a few seconds with the touch of a button. Funding takes less than 2 weeks. Hello, that gives you an advantage when you're making offers on properties. And I can't say enough about partnering with Backflip Capital. They're great folks with a fantastic product that everybody listening to this should check out for the next time you go to do a Burr deal or fix and flip property. So here's what I want you to do. Go down to the show notes of this show. I've put a link for Backflip Capital in those notes. All you have to do is click the link so that you can download their app and get your next deal funded with Backflip.
If you've been struggling finding good real estate deals, I've got a solution for you. It's REI Call Center. REI Call Center has professionally trained and managed cold callers to help you scale your real estate business. I think they give you somewhere around like 1,500 cold calls per day. Their clients have closed around $10 million from the leads they brought in. They got close to 200 clients going right now, and they're really more than just cold callers. Yes, they have their team of professionals who are making their calls, but they have weekly trainings and Q&A calls for yourself. They have training videos. They've got Slack channels with dedicated people to make sure you're successful. They've got checklists, cheat sheets, you name it. They've got you covered to make sure you are successful in your real estate journey. Well, how does it all work? Well, step one, you're going to pull a targeted list working with them from PropStream so that you can target the certain locations that you want to start buying properties in. Second, they're going to use their Zen call platform to start calling 1,500 calls a day per cold caller. They're going to then upload all the leads into Asana. You have a view of them, and you can go attack and start buying the properties that you see that pique your interest without having to do any other work. Look, I have worked a W-2 job while building my real estate portfolio. I've been raising a family the entire time, so I haven't had time to go and cold call myself. And that's where a company like REI Call Center comes into effect to be able to take that load off your plate so that you can generate leads, close more deals, and build that portfolio. You can reach out to them at reicallcenter.com, or if you go to the show notes of this episode, you will see a link that will take you directly to them.
Buy your first or next real estate deal in the next 90 days guaranteed, or we'll continue coaching you until you do. That's my guarantee if you join my rental academy. I've stumbled upon a process that is so powerful that I can sit here today and say, you can come into my world and buy your first deal in the first 90 days. And if you don't, I'm going to keep coaching you until you do. What we've done in the Rental Academy is we've removed all the roadblocks for you. I've already chosen the market for you. You're going to have leads generated automatically. Myself and my team's going to work with you to analyze those leads. When you pull the trigger on a property that you want to buy and you need to fund it, we've got lenders in place. And after you've closed on it, if you need to rehab it, great. We've got contractors in place. And if you want to keep it as a rental, we've got property managers in place. So you come into our world, we plug you into a proven system, make it easy for you so you can have success in your real estate investing journey. If you're interested, you can go to cowboysacademy.com, or if you go down to the show notes of this episode, click the link that says Cowboys Rental Academy, and it will take you to your next steps there.
So you say the word creative finance. I think it'd be good to clarify for the audience. And you mentioned 3 different options. You got seller finance, sub to, and then lease purchase.
Yeah.
You've explained the seller finance. I feel like I'll reiterate, tell me if I'm missing anything. A lot of times seller financing deals are going to be done if there's no mortgage on the seller's property, if it's free and clear. Easier to set up seller financing that way. Lease purchase is what you're doing on the back end, correct? To sell the property. And if you're getting into them on lease purchases, let me know. And then sub to. So just explain quickly the difference between those three buckets you focus on.
Yeah. Sub 2 is great for this market. So let me go there next. And I say that because what were the rates not too long ago? 2, 3, and 4%. So we are literally in our community at record numbers seeing students and ourselves buying these properties where we go to a seller. Unlike the free and clear seller, these sellers are usually financially, stressed. They need fixed tomorrow. They need relief. So they are willing to deed the property over. And we do it as a regular closing, but the loan stays in place. It stays in their name until sometime in the future when we cash it out. There is no end date. So if you ever bought a house, your settlement statement has your bank, your new money coming to the table. The only difference in the settlement statement is it says right on it, subject to existing loan with in the bank's name. So we buy it that way and we sell it the same way we exit all of them, rent to own. Now it's super, super, super important. I don't care what state you're in, that you get an attorney that knows and does a bunch of sub 2 deals. Because if you don't, they're going to say to you, you can't do that. That's what they'll say. Yet there's attorneys that do thousands of them. I had a call. New Jersey is the market I called for a student. He had to go to Israel on a trip. And part of what we do, as I said to you earlier in the show, is we help him. So I said, don't worry about it. You go. I'll call, get your attorney set up. We'll get this deal going. I called 4. Now, as long as I've been at this, there's nothing I could have said to those 4 attorneys that would get them comfortable. Why? Because they never did them. And then I finally got an attorney. We now have them, and they're in 32 states. And they do them like clockwork, and they do them right. And so you just got to be represented properly.
That's smart. Yeah, because there's some intricacies from my understanding. I've never done a subject to an existing mortgage deal personally. I've done seller financing and some other creative stuff, but it seems as though you got to do it the correct way, have an attorney draw it up correctly. And I know everybody's biggest question is the do-on-sell clause.
Yeah.
So how do you guys overcome that? And the do-on-sell clause is just if a lender finds out that the property has been sold, quote unquote, to another buyer, then they can reach out to that buyer and say, hey, this entire mortgage is due. So how do you guys overcome that?
Yep, that is true. That's what you explained is a contractual issue between bank and seller, owner. So here's it. Now, this is not, I got to do the disclosure, right? I am not an attorney. I'm going to tell you how we've been advised to do it.
Yeah.
We do place it, there's 2 ways. We do place it by a naming standpoint. We place it in a trust. And the trust is, if it was your trust and you lived on 123 Yellow Street, it would be 123 Yellow Street, Suster Family Trust. Now, why do we do that? In 82, I think it was, 1982, the Garment St. Germain Act was in place to allow sellers to transfer property without triggering due on sale for family planning reasons and trust and estate planning.
Yep.
That's why we do it. I'm not telling you that it'll never happen to you. I'm telling you that's why we do it, and I've never had a foreclosure. Second way you can do it, and attorneys love this actually when they're representing the seller, is you can just do a land contract or a contract for deed. Other people call it installment contract, because then the deed sits in escrow. It doesn't get recorded. I had a student in Pennsylvania, and his attorney said, hey, Don, there's a small bank, in his opinion, there was a small bank locally like calling some loans. So he said, why don't we do contract for deed? And then it's again, not fail safe, but I feel better as your attorney doing that. So he did like 3 of them like that. So again, lean on your attorney and say, what's best in this state and what's best for me and the seller here. Let's get this deal done.
Interesting. How is it? Is it hard to convince sellers? Like, because I feel like you're having to educate them.
Yeah.
And you made a good point. They're in a place where, hey, we need help yesterday. So whenever somebody is hurting and they need a solution, I feel as though they're more opening to listening. But I feel like you got to educate too.
Educate versus, you said educate and convince. I'd say more towards what you said latter, educate, because I don't want to ever convince. Let me just go there first, because if I'm talking to this owner from this building, his issue was estate planning, taxes. I'll do a deal with you. Let's talk about detail. Okay, I solved his issue that conventional market wasn't solving. Realtors coming weekly going, I got an offer. He's like, I don't want an offer. Now, sub two. I'm trying to think of the most recent one. Okay, Cape Cod again. Couple gets divorced. They're now 2 months behind. They hate each other. It wasn't amicable. And my son-in-law got the deal, Zach, and we had to catch up like $4,100 in arrears. But all they wanted was, please fix that and get this off of our plate. Now, one was on the deed, one was on the mortgage, so we had to like be the go-between, but it worked. And that why? Because we solved their issue. If you just listen to sellers, like here's a script. Where were you going if you sold it? Because usually people didn't sell it. That's why they're talking to us. Where were you going? Why? And how soon did you want to be there? And what if it doesn't sell? What's plan B? Their plan B was it's going to foreclose and screw up their credit for 7 years, right? So now we take it over, we catch up their arrears, and for 6 months of more credit, probably they're fine, right? So because it corrects itself eventually versus a foreclosure. So that was a long answer to just say, find the motivation. You got to know why they're selling, then fix for it. And if you can't fix for it, then tell them you can't fix for it and move on.
Yeah, keep moving. That's really cool, though. I love how you have that conversation. I feel like anytime you're buying real estate, you're solving somebody's problem.
Yeah, 100%.
You know, and there's tons of different ways you can solve their problem. I had a property not long ago that they were moving from South Carolina to Michigan, needed to move as fast as possible. I said, well, I can close in 7 days. I just need, this, and this done on my end to be able to do it. And they're like, done, deal. And we closed in 7, not 7, or maybe it extended to 10, but
bingo,
got the deal done. But you're right. You got to find out, hey, what is the reason? Like, what's going on here? How can I fix it? What are your other options? And then just shoot your shot. And if it works, great. If it doesn't, just like Chris said, keep it moving. Go find
and if they say something like, I give you the opposite end. If they say something like, I don't care if it sells, I was just trying it, or I don't care if it sells, I was just going to downsize, I can do it next. Okay. It's not your conversation.
Yeah. Now, what are you guys using to, you go as like detailed as you want, but how do you find your leads? Are you pulling list and then just dialing using something like PropStream or whatever your app is, and then going after people who fit your particular niche?
We do a couple of things, and I'll say why a couple, not just one layer. One is we use a service that provides us with expired listings that didn't sell with a realtor, for sale by owner, and for rent by owner. Those three primarily. Then if someone's in an area like us, we were in Rhode Island, we're like, okay, we got to expand the types of leads because it's just too small. That was years ago. So if someone's aggressive, they're going, Chris, I don't have enough leads to do the deals I want to do to get to my goals. Then we'll add niche lists like from PropStream or wherever else for CRM. But what are some cool lists? There's no wrong answer. What are some cool ones? Free and clear, out of state. I love them. So you look for those 6-figure deals. Bought between like 19 and 22. I love those with little equity, because if they get a move right now, they probably don't have much equity left, especially if they did like a VA loan or something like that. So there's all different lists that our community plays with, and we're like a microcosm of society. So I get to hear, right, what's working, which is pretty cool. But that's how we do it. It's called My Plus. It's on our website, but they provide expireds. I think in our research, the only ones, Jaron, that provide expireds without being a realtor. So that's why we've stuck with them since, nice. 2012, I think.
Yeah, because a lot of times you have to pull that data off the MLS. Well, you don't have access to the MLS unless
so this
you're a
is
realtor.
Super convenient. Yeah.
That's really cool. And even I had my license. I got it, I don't know, years ago, but I didn't know any better, just totally off topic, but talking about like having access to the MLS, that each MLS was just like in a particular area.
Yeah.
So I'm like, I got my license in South Carolina, I'm going to be able to see all properties in South Carolina. No, you have to join each MLS in South Carolina. I'm like, what is this? What are we doing here? I wanted more data, but they're going to make you pay for it. So I don't blame them. They got to get their dollar. So let's talk about the lease purchase. We talked about the seller finance subject to. What's the lease purchase look like for you guys?
Lease purchase is my least desirable, meaning profit wise and accounting wise, because I don't own it. I don't get any of those benefits. But when I was brand new and when a student's brand new, why is it so advantageous? One is the lease purchase. So all the lease purchase does, first of all, is I contract with you as a seller with a lease purchase instrument that says I'm going to take over the underlying mortgage. And I'll tell you, we don't do that right away. I'll tell you how that works. But take over the underlying debt that's there until on or before some date. And usually it's 36 months, because if they're in their primary and they leave, they're gone from that house for more than 3 years, that could trigger some not so advantageous capital gains. We don't want to put them in that spot. So we tie the property up, we control it with the $10 deposit. This is why the new students love it. $10. It's written right in our agreement. You can create those 3 paydays I was talking about out of thin air by tying up a property for $10. Now, 2 things. We had a student in Chicago. Brian's like one of our, probably the best, if not one of the best students. And he's like a poster child for the community. He did his first 8 or 9 deals with lease purchase because he was comfortable doing that. He wasn't comfortable owning yet. And he created like a little over 800 grand in all 3 paydays. That's what the averages are out there in the community. So here's the challenge though. One is you go to cash that out. We call it payday 3. That's not the same tax situation as if you owned it. A and B, you can't depreciate. There's no advantages there. But super easy. No deed transfers. We do cloud title. So your seller can't go sell it to Uncle Joe without telling you. So we cloud title with a notice of option. So we're protected. And I can't tell you how many times that helped, Jaron, at the closing table. Like the sellers get amnesia real quick when it's 3 years later and they forgot what you fixed, right? And they go, oh, Jaron's getting 80 grand here. And they want to back out. But if you have a notice of option, you got to tie it up. There's no backing up.
They can't
do that.
That
was a long answer. Did I make sense on that on the lease purchase?
No. I think you definitely did. You've mentioned the 3 payday system a couple times, and I want to give you an opportunity to break that down so the listeners know what you mean. Yeah.
So remember, we're dealing with buyers, not renters that someday maybe perhaps want to buy and they have a pipe dream. Like that's not the person. Nothing against renters. I rented when I went through the crash, but that's not who we're dealing with. We're dealing with buyers that truly need time. Like we said earlier, the person starting a new business, credit got trashed during COVID, they're back on their feet, not a 30-year problem you're trying to fix. So given that, they have a down payment. They're ready to buy. So that's the payday 1. I'll give you the averages here in a minute, actually. Payday 2 is that spread I talked about earlier, the delta between what I'm paying the seller or the underlying mortgage and what I'm getting. And like in the oceanfront home, that was rather significant. And then payday 3 is all that principal pay down and the markup. I'll give you the averages. Right now in our community from, East Coast to West Coast, I'm seeing a low of like 45-ish grand per all 3 paydays, and a high. There's really no limit, but I'm like the highest I've ever seen in the community is like 2 something. I'm working on a deal in Maryland right now that could go over that, but those aren't the norm. The norm is somewhere in the middle. We as a family are around 75 grand. We're in the lower end actually, New England. But those are lucrative. I share that just to say, yeah, the 3 payday system that we trademarked is pretty cool, but know that you don't have to go out and do, depending on your goals, 20 of these deals to be lucrative.
Yeah, you just have to do a few, and it's
for most people.
Right now. Yeah, for sure. Obviously, every deal is going to be different. Now, you mentioned this earlier. You keep some in your portfolio. Are y'all usually exiting out of these at some point after whatever the balloon period is, or do you try to stick some into a portfolio?
This is a great one. So this is the more advanced thing I alluded to earlier. So I call it wealth stacking. And what happens is, I'll use Brian, the guy in Chicago I talked about. When he got to about 8 properties, I said, all right, Brian, let's kind of wealth stack this portfolio. And what it means is, okay, you got one that's cashing out in 4 years. You got one that's cashing out in 2. They're all staggered. And some of these sellers in the lease purchases are owed not just to pay off their underlying loan at the end, but they're owed some cash, whether it's 15, 10, 20, 50, 100 sometimes. So what you can do is if you have some that have like little cash due at the end, you can take another payday for another deal. You can offer early payout, discount it, and now you can buy that sub 2. So you took a sandwich lease, turned it into a sub 2, and turned it into, you can rent it. You can, do short-term rental. You can do whatever you want to do. Do another rental, whatever you want to do. So we do look at those and start to say, how many of these do we want to do more long-term? So everything we do now as a family is based on the longer term, or trying to get to that point by exiting out of a sandwich lease and into something like a sub 2. So you do keep them. That was a long answer to, you can keep them or you can spin out of them. When people knew, they want cash flow, right? Like, Chris, just show me how to get my first 2 or 3 of these babies, and that number, then I'll start looking at keeping them. And like my building, you don't have to do residential. This works in any asset class. if you read there's a book, I only read it because the family was in Newport, the Vanderbilts. And Anderson Cooper, I think, wrote it. And it wasn't long ago. And in it, it talked about his family doing real estate in New York City before banking. They called it master lease purchase and owner financing way back then. So it's not like it's new. It's 1600s it was around, right? We just wrapped a bow around it and kind of put some systems in place, but it's not new.
Yeah. Yeah. Oh, yeah. No, people have been doing creative deals forever, pretty much.
Yep.
And it's I always say, there's a lot of good ways to buy real estate. The generating leads, you got to start with generating those leads, and once you have those leads, then it's like, okay, how are we going to attack this?
Yep.
What does this seller need, combined with what is most advantageous for me, and then let's go make that happen.
Yeah, and I think in this market, Jaron, and I love your opinion on it, but in this market, I think I said this to you right before we started the show. Real estate's going to always change. And people go, well, I'll wait for the up. I'll wait for the down. It's one constant. It's always going to change. So how about instead of trying to time stuff, because you're not going to, how about you just get really good at what you just alluded to, which was just learn how to do deals after you get the lead and learn how to do it in the creative space so that you know how to pivot up, down, sideways. The market doesn't matter. I can tell you right now, we just had a record month in June of the community, the Wicked Smart community, the students, how many properties they put under agreement. It was back to right before COVID. Why? Because the market's, people are getting nervous. The media's screaming in their ear. They're probably wrong, but they're screaming in their ear. And so you just got to get really good at knowing how to create deals in the creative space. And when you do, you won't stress on the market at all.
Yeah, that's good. I follow a bunch of these finance people, and they love index funds, which, whatever. And the thing they talk about is dollar cost averaging. And I think that's one thing real estate investors can take away is, well, and what that means, let me break it back. Dollar cost averaging means you just continue to buy consistently in the stock market, whether it's high or low. And that principle, according to data, says over time, you'll do better than the people who try to time the market. And I think the same is true in real estate. It's just keep buying, find deals, and then fund them in whatever way is advantageous for the type of market that we're in, and keep adding them to your portfolio instead of sitting on the sidelines. I talked to a guy the other day. Oh yeah, I'm stacking up some money for this fall when interest rates drop. I was like, first off, you don't know where interest rates are going, just from a non-creative perspective. Like, second off, I get them at like 6.3 right now. When I first started buying, they were at 5.875. So I'm like, they're really not even that high, and don't ever expect them to come back down to where we were seeing. I don't know if we will ever see that in our lifetime.
I agree.
Again.
I said that
2 to 3%. It's crazy.
Yep.
So, but that's the mentality of folks. It's like, oh, I'm going to try to time this because of something they read on Twitter or something they heard, like you said, on Fox News or CNN.
Yeah.
And all the while they are missing deal. I'm buying deals consistent. I got 2 closings coming up here in the next week or two. I just closed on 2 more. We're about to make an offer on 7. Like, it's just nonstop. And that is the way you build wealth and have success over time, not sit on the sidelines waiting for something bad to happen.
Yeah. Get good at creative and pivots. That's all you got to do.
I love it. I always like to ask this question when we're talking about creative finance. I've done a number of deals creatively, some of them where I've had to put money in and some of them where I don't. There's a big, all of us like to talk about whether you're doing BRRRR, whether you're doing creative. I can teach you how to buy real estate with putting little to no money down. So I always like to ask folks in each different space, how many deals do you do where you actually, at the end of the day, start to finish, deals done, you didn't have to put a dime of your own money in?
The only one that you would never put a dime, it's $10 built in, but very few times they ask for, is the lease purchase, because you won't. The owner financing in the sub 2 is a different animal. Why? Owner financing, we're saying to them, okay, we're not going to put a down payment down. We're going to give you a price. We're not going to put it down, and we're going to do principal only payments. You cannot expect them in a state where there's a transfer tax to come out of pocket for transfer tax if you're buying it with no money down. So you are going to come up with some money for the transfer tax. That's a kind of a rule of thumb. And then the sub 2, same thing. They're usually doing the sub 2 because they're stuck. So you either have arrears and or transfer tax that are going to be part of that. So you're not talking gobs of money, but you are talking a little bit. And then again, the lease purchase is $10. So you're going to be between $10 and say 5,000. Let's say the last event, Jared, I had everybody stand up in the room. We were in the ballroom. We do it twice a year. I said, okay, everybody stand up. We did like $80 million. It was controlled in the room. I said, how many put a deposit down for X and X and X. The entire room was like $2,500, like total spent. So there was probably a lot of lease purchases in there. But are there exceptions to that? Yeah, the oceanfront home for $945 that I said earlier, we put a whopping, I think it was $8,000 down on that house. So we broke our rule, but it was a $945,000 house.
That's a W. That's
and
a
we
win.
paid transfer. I think it was maybe $4,000. So again, there's exceptions to everything. But when someone's brand new, we teach them just go this route until you establish yourself. That's all.
Yeah. I always say the reason I bring this up is because I talk about different methods to be able to use, because I believe it's very advantageous to buy real estate without using little to none of your own money. I really do. But what I have learned is most of the time, at some point, you're going to have a little bit of money in, and so you just have to be prepared, no matter what strategy you're doing. It seems like I don't do lease purchases, but it seems like that's probably the cheapest amount that you have to get in. But if you're going to own real estate and buy it on the front end, you're probably going to have to find some money from somewhere. And then at some point, you're going to have maintenance that's going to pop up, or you're going to have a vacancy that's going to potentially pop up. And the reason I bring this up is I fear that some people who aren't quite financially ready to own real estate as an owner think they can, but you have to understand that at some point it could be a capital intensive venture throughout the journey. And I always just warn folks, if anybody's listening to this, if you're living paycheck to paycheck and you're broke, think twice before you own a piece of property. There's creative ways, the lease purchase, the arbitrage, that you can get in and find a spread on cash flow without having to own something. But I always say it's not a broke person's game. So
I agree.
That's
I agree.
my rabbit trail.
I'll throw this quick tidbit then on that exact point. We have, and I started with it because I was broke coming out of the crash. We have one of the techniques that we didn't mention. The fourth one is called an AO. It just means a sign out. It means I'm going to tie the property up like I would a lease purchase. I'm going to get the rent-to-own buyer like I would the other ones, but then I'm going to sign that buyer to the seller. So I'm going to get my check and leave. So my first deal in like end of 12 or whatever it was a Mason driving by a house who drove by the house all the time and saw a realtor sign, knew he couldn't afford it. He was a guy that needed fixing, but he had great cash flow. So he put $23,000 down on this $230,000 house. And the way we do our AOs, I split that with the owner. We'll get an $11,000 check in, like, I think it took me 11 days, 4 days to get the property and then 11 days to cash it out. That was a big deal coming out of the crash, right? And so when people knew, they could do what's called these AO deals and get cash flow going without owning, to your point.
Mm-hmm. Which is essentially wholesaling as well.
It's a
right?
form. Yeah.
That is awesome. Yeah, for sure. Yeah, you're gonna have to. You need to generate capital if you're broke. That doesn't require you owning a piece of property. I think if you're gonna have success, just like Chris said, 100%. Chris, where can people find you? Where can they get a hold of you?
I'll give you two things. One is we'll give your whole tribe, anyone listening, a link for the best-selling book. One of them. We have 4, and we'll mail it. This is not one of those offers that says put a credit card in for shipping. We'll mail this thing for free, physical copy. Just go to wickedsmartbooks.com/cowboy, and then we'll know it came from this show. If you can deal with my New England accent, to Jaron's point earlier, for an hour, there's a free class, and that would be best because we had a great chat. But listen to the 55-minute masters class. It's just at smartrealestatecoach.com/masters class, and it's a webinar form, but it's pre-done. You can listen to whatever you want. Nobody's going to be in your face. You take your time. I'm big on free, Jaron, because if someone does that, then they can decide on their own, hey, that's a cool niche, and you know what? That's not for me. Then you don't have to waste time reaching out. And last but not least, if you want a live call before you do anything, just go to smartrealestatecoach.com/action and get your strategy call.
I love it. Chris, thank you so much for being on today, man. I've looked forward to this episode for some time. We've had it scheduled, and I think we've had to schedule and reschedule a couple of times between the two of us, but this is fantastic. Love your perspective. Love the success you've had. You've been doing this a really long time. So everybody listening, you guys got to hear from somebody who's seen it all and is running a fantastic team. So Chris, again, thank you guys. Go check them out, smartrealestatecoach.com, and hope to have you on again soon.
Thanks, buddy. Pleasure.
All right. Talk soon.